All right, good morning, everybody. Go ahead and get this dialed down a little bit. Need to hear that. All right, let me get the Zoom going. Hopefully, everybody had a decent Monday. Okay, we're up and running. So, as we generally do, first thing I go to the Market Watch tab, check the calendar, asking just the very basic, simple question: is there anything happening today that I need to know about that has a time on it? I was talking with somebody yesterday about being, quote, in the know and knowing what's going on around us. And when I've taken trades that didn't work, I wasn't really all that upset. I tried, it didn't work. Okay, I move on. But when I take a trade and it didn't work, and then five people tell me, oh, you didn't know that one thing over there was going to happen today and that trade had no chance of. No, obviously I didn't know, or I wouldn't have taken the trade. Being out of the loop and taking a trade that has absolutely no chance of winning because of a certain situation that we didn't know about, that is something that really frustrates me. So, it's starting with these time frames. If you go to get into a day trade right before an announcement and then get ran over and say, what happened? I got hit, my stop got wiped out. Oh, you didn't know one of these auctions was going on at 11 o'clock today, and you happen to get in at 10:57. A lot of times when these economic events come out, nothing happens. It's because we don't know if something's going to happen or not. And there are different severity levels for the different uh, economic events. Thinkorswim doesn't rank them that way, but if you go to places like FX Street, they would have these in a list, and then they'd have like a color scheme next to it. And the brighter the color, the less impact, and the darker the color, the greater the impact expectation, right? Because we never quite know. So you kind of get a feel for it after a while. The auctions today at 11, 11:30, and 1 are my go-to. They're going to be the ones that I most focus on today, mainly because we're still getting that Christmas rally in the indexes, and the indexes are going to be more greatly impacted by these auctions than regular equity markets, right? So yeah, I'm trading Apple and Microsoft, and I'm playing the game like everybody else, but I'm still going to be watching for an opportunity at 11, 11:30, and 1 in the indexes. And I think I've been neglecting the cues a little bit. Maybe we go over and trade those a little bit, and make them feel good again. So these are the times of the day to be aware of today. We'll just kind of come over and take a look at the ES. Now, this is a daily chart, just one of those quick charts, right? Where it's only got like a month of data. And you can see that yesterday we breached the edge of the weekly expected move already, right? We managed to do that yesterday, and we're still moving outside of it. Now, I bring this up because there are institutions who trade strangles and straddles on one of those lines. We never quite know which one, right? They don't put out a newsletter, but they'll sell straddles or strangles on that line, and then they'll trade ES futures to get back to delta neutral. So they'll do that in like the SPX or the SPY, XSP, right? They'll do it in a market with liquid options, and then they'll get delta neutral by trading the ES. The damage or the danger here is when we breach beyond the edge of the weekly expected move, the farther we travel to the upside, the more that they have to buy to get back to delta neutral. And of course, the more they buy, the more we travel, and the more they buy, the more we travel. And it becomes a cycle or a little bit of a loop. One standard deviation outside the box is not that bad. It's no big deal. If we breach beyond a 2 standard deviation move, then it could get really, really bad, mainly because of the lack of liquidity still and the fact that the algorithm is just going to do its job, right? It doesn't care, it doesn't know, it just understands that it needs to get back to delta neutral. The volatility box from October to late September, October, no, I see October, late November, early December in 2018 was a really good example of a downside volatility box compression right before the deep dive into the Christmas lows and then the rally back out into 2019. Yeah, I remember that. I don't even have to go out to the chart to look at that one. All right, so why am I out here looking at the daily? Well, we always want to start with the daily, right? Even as a day trader, just taking the opportunity to come out, take a look around, and just ask a basic question. Am I going to hit anything today? Are we moving towards a major moving average? And of course, right now, no, we're not. But if you never go out here and look, you'll never see anything. Kind of goes back to what I was talking about this morning, where everybody says, oh, what? You didn't know we were going to hit that 20 today? No, obviously I didn't, or I wouldn't have taken the trade. 3.5% above the 10-week moving average. Now, it's not that bad, right? 3.3.15 in the last 4 years. What's the average turnaround? See, that corona messes up everything. Every time we try to do any kind of back testing or just look back, that big dip skews the numbers. All right, so it looks like when we get at near or around 4% away from the 10-week on the ES, we seem to pause or consolidate or wait for the market to catch up. Now, due to the Santa rally, lack of liquidity, blah blah blah, I don't expect a reversal at 4. I'm thinking we're going to press more into maybe the 4-5 or even just 5 flat. All right, so we got plenty of room. Why do I bring this up? Well, we got to ask and answer that very basic question. Have we gone too far, too fast? I like the simple moving average, by the way. I don't like that exponential. So it's the same thing here on the daily. You can see how we are topped out right now, 2.45% above the 10-day moving average, which is fine. We've had periods of time where we've done, more than that. But, since 2020, I mean, all year long this year, that's, man, that's been the reversal spot, right? Data at its finest. I'm just stop my mouse right there and look. Every time we've tagged that spot, when we've gone that far away from the 10 period daily moving average, we've reversed every single time in 2020. Does that mean we're going to reverse today? No, of course not. And we wouldn't want to just run out there and short the market because of that. But look at that run, right? From 45.25 to 47.25 to 48.25, right? We're talking about a 300-point move in the market in 7 days. Probably take one more day to get there, right? So is it possible? Yeah, absolutely. But we need to be ready, one, for a market to pause, stall, consolidate. This doesn't say we're going to fall, right? This only says that we're going to quit advancing. And that very often just means we're going to stall, we're going to pause. For those of you who don't trade the futures, maybe swap over to something like SPY. The upside target is between 480 and 482. Call it 483. Christmas rally target is 486. And then we'll be looking for a pullback anywhere from 5 to 7% after we reach that target. Before today's trading day, just be aware that we are at the edges of where we have turned around all year long. Doesn't mean that we're not, at least we're at the edges of where we would quit advancing, not necessarily fall. We are already above the weekly expected move. We are out of yesterday's price action. We had a really nice kill zone move, which happens between 2 and 4 a.m. But as often is the case, we give some of that back, right? It tries to reset or revert back to before the kill zone move. So a retest of Monday's high is not off the table. We're not up very much on the day, which actually gave me comfort this morning when I came in. I didn't want to see like a monster rally before we even had a chance to trade today, right? I want to participate in the trade too, not sleep through it. So the fact that we didn't advance too far yet was a good sign to me. I wanted to at least have an opportunity to play a little. We still have an ADR of 1.6, but 12 hours of the day are gone. So I don't see that we're going to be able to tag that without some really great boosters, either from economic news or just straight up some news coming into the market. The overnight session around the world went basically without fanfare. Nothing extreme or dangerous happened. No crazy statements from any leaders. Nothing. It's been just, knock on wood, relatively quiet out there. There has been some indications that volume is beginning to pick back up again, which makes perfect sense, right? Places are going to begin coming back online. For today's trading day, when we are advancing into the unknown, when there's nothing over our head to aim for, we have to go ahead and use our Fibonacci's or this new quadrant tool. That quadrant tool is pretty darn handy. So like this little micro cup right here, right? If we wanted to measure the depth of that cup, say from high to low, and then it will project the distance of that 100%. Or, you can go in and change the lines. You can project it to whatever you want. 50% is around, the halfway mark, an area of concern, and then 100% move, right? And it works great for head and shoulders, cup and handles, just range, right? When we have a range, we measure the distance of that range and plot the outside break for it. Just a real handy tool. That way you don't have to go in and play around with your Fibonacci values. I like to leave mine set in place. I don't like to readjust them to measure something different. So to get to that, your mouse has a wheel that you would normally scroll up and down. You would roll the wheel up and down, but that wheel is a button. So if you push down on that wheel, you get this little micro menu. And then it's just down here at the bottom, quadrant lines. That saves you from having to, right click, go to drawing, come over here, come down here, or to go over here to the drawings, right? Just a little shortcut. Yeah, I know you like it. All right. So when it comes to this flag that we have here, if we were to expect a continuation, one thing we can do is just take that flag pole and copy and paste that flagpole off of the pullback. And that gives us an upside target right around 8. We're going to say 811 because there's a cog line there. So 48.11. The distance from the open to, or from where we're at, we'll just do it that way. We're looking at about 0.34, and we've already got 0.28. So, less than a 1% move to get to that next target. It's nothing, right? That's nothing. We can make that move very easily. To the downside, we would first need to break through the high of Monday, this pivot point, and then back through the weekly expected move. One thing that is worth asking is there any volume node to deal with? And you can see the shallow area here, time by price and volume by price. We have that shallow area. So we could move through the mid to low 70s very quickly. Should we break through that 47.75 to the downside, we could very easily go to 47.25 with some really low resistance, right? There's not a lot to stand in the way. We always want to just take a look at both directions, right? I'm not saying we're going down. I'm not saying we're going up. If we were to go down and we break 47.75, then we have a clear path to 47.25. Let's just say it that way. Yeah. For the Nasdaq, you can see that we're up a little bit more here, a 0.5%. Got a near-term target of 680. A nice kill zone move that started at 2 and ended around 4 a.m. It would not be a surprise if we start to give some of that back first. If we move to the downside, we'll deal with yesterday's high. We will deal with that pivot low off of around, well, right at the roundy 16,500. And then we'll deal with the last pivot before the open. I really don't see it getting that bad today, honestly. I mean, markets move up and down even when they're trending up, right? So we do expect some downside action. Just I don't expect it to go that far, but we moved through this area very fast. So if we were to go back and look at the volume profile and time by price in this area, you'd see it's very shallow. We'd move through it very quickly. So should we break below that 16,500, we're going to go to 16,400 relatively quickly. That would be the target. For the upside, we're just going to be looking for this continuation, this march on out. And it's worth noting the average daily range right now, the ADR, is 2.23%. Yeah, I mean, we're very likely not going to see that. But in that move to the upside, we do have a little bit of old price action up there, 767. So from our current location, not even a 1% move, right? 3/4 of a percent. That's not bad. We can make that. 16,800 is not out of line by the end of the week. While we're out here on this higher time frame, it's the same time frame that I have over here, but it's a bigger chart, so we may as well take advantage of it. Notice that we are at the edge of the weekly expected move. We're there, right? That is the value. That is the number that we're focused on. That is the entire range of the week the range that it was supposed to take 5 days to make. We've already made it. If we want to get that number, just so that we can plot it, 1665811. And of course, you don't do pennies in the futures. So that's the upside target for the EM. And you can see we've already had first touch. First touch rejection play is unfolding. We're rallying back up for a second shot. 16658. So these lines were plotted last Friday. Between now and then, a lot has changed, right? Volume and volatility has changed. This is what they call a static expected move. It's locked, it's set into place, it doesn't change. If you did want a more current, more accurate, what they call a dynamic expected move, then you can come into the options chain and look at how many days are left, and then look at the expected move that's left. And remember that it's plus or minus. Also, note that there is no market maker move right now on the Nasdaq. I think the Russell had one or has one. Nope, no market maker move on there either. So they're not anticipating any additional expected move. Same thing as before. You always want to go out to the daily chart, just take a look around, ask the question, are we going to hit anything? Yeah, if we continue making that move to the upside, we're going to hit this previous price action. First touch play, right? First time we get there is very likely to be a rejection. The question is, will it be a soft rejection or a hard rejection? This kind of candle is what it looks like when you take a hard rejection, right? Gets to the top of a range and just gets a smackdown. You see, as opposed to getting to the top of a range and gently pulling back a little bit. Soft rejection, hard rejection. Mega caps were on the move this morning. That's where I would continue to put my focus. It does match very well with the Santa rally discussion that we've been hearing all about. There it is. Um, Applied Materials was in the IBD bases and breakouts email. That's something they started doing in like late November. Send out an email every day of their greatest hits. It's hard to come to terms with a trade logic that buys high, sells higher, but that's literally what they focus on, right? And you can see the buy zone on Applied Materials is 159 to 167, right? It's an $8 expected move, or not expected move, but an $8 buy zone anywhere from at the top of that price action, top of that breakout, all the way up to 68, 67. Yeah, 67. They consider that entire thing a buy zone. Now, I'm not saying that, they're right or they're wrong. It's IBD, right? It's Investors Business Daily. If you had done the same thing when it broke out of that high, it had a nice run and then a lot of consolidation. They call it a base on base. It's part of a base on base pattern that started in April. It's got a really strong relative strength line, blah, 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 blah. Right? It's just on down the list. I just pointed out because I seen it in the email, and I trade Applied frequently. You know what I know. All right. So looking at the sectors this morning, XOP is leading the list, but Cloud is right behind it. These two keep swapping places. Cloud is an ETF, CLOU. I keep that ETF around because it's if you're just using XLC, which is communications, then it doesn't quite get it, right? You need something else. So when I bring up Cloud, CLOU, these are the names that are in Cloud: Dropbox, Plan, Netflix, WDay, FSLY, Shop, Twilo, ZS. These names make up that ETF. The ETF, is a basket of stocks of cloud names. That is up in the pre-market this morning that we were seeing while we were looking at. Where the heck did it go? So XOP, Cloud, XLE. XLE and XOP are both energy, right? But when we say energy, it's very vague. What kind of energy? Production, exploration, transportation, green energy, right? Energy just doesn't get it. That's like saying finance. What kind of finance? Credit cards, lending institutions, insurance. So I have both of those on the list. They're both doing very good this morning. The play started yesterday. If you've seen that move in Chevron, yeah, right. I told you guys yesterday morning energy was going to be the play, energy and finance. It's been the play for the last few months. XLP is kind of fading to the background. All of these that are negative, they're slightly negative. They're barely negative. They're almost not negative at all. Just yeah, it's like they don't even. They're just not getting flow yet. And that's what I would be watching through the morning to see all of these come together. We closed yesterday with 454 names in the S&P advancing, right? So I mean, those names in the S&P, 500 names in the S&P, they're scattered through all the sectors. Emerging markets slightly green this morning. It's tech, energy, right? Those things are just leading the way. And it's the mega caps. It's the performance chasing. Um, and it's not looking to slow down yet, right? We just came out of a very nice pullback in the S&P before this latest run into the highs, right? So we're primed for a really beautiful liftoff. So we're going to see it, right? See it across the board. These two watch lists down at the bottom is really just one watch list broken apart. Plenty of names on that list this morning and the sectors that go with them, right? Even if these aren't the names that make the weight of that sector. I would still be looking for any red to green or inside days. Yesterday we were talking about these bear pennant breakovers. Really love this setup. Right, you get a nice bearish pullback, and then you start getting these equal highs and higher lows. Forms that little bear pennant, and then the breakout day. I like them just like this, by the way. It already happened yesterday, so you've missed it now. But a red day the day before, a pre-market rally at least as high as the previous day's open or the previous day's high. I'll take either one. And look at that. There was no wick on the bottom of that thing, right? It opened and ran. Comes back to that buy high, sell higher logic. And that sucks when you're trying to day trade that, right? Because who does that? We want pullbacks, right? But you don't wait for a pullback in a momentum trade. And then a nice follow through, right? So red to green on a bear pennant with a breakout play. And we would target, the next pivot up or the shadow candle here, top of the range. And it didn't quite get there, but that would have been the calls that I would have been using. So I would approach it from the same way today, looking at any day chart that offers you your intraday trade opportunity, right? Find a pattern, a setup, failed flag, bear pennant, failure, inside day, red to green, and then try to combine them, right? Like get a red to green on an inside day at the bottom of a downtrend, something like that. It really was odd to me when I was going for my CMT certification and I would see these analysts focusing literally on like that much price on a daily chart or a weekly chart or a monthly chart. And they would have, 10 candles. Like, seriously, what can you see there? And their argument is, well, if you already have seen the greater chart, then you know where you're located, right? Are we at the top of the range or the bottom of the range? So you already know where price is located. That's not the issue. You don't need to be way out here once you know, oh, yeah, I'm at the bottom of the range or I'm at the bottom of a pullback. Now, the question is, well, what's going to happen in the next, today or tomorrow? And for that, none of that old data is going to do you any bit of good, right? Now you're going to be focusing on literally these few candles, the pivots that go with it, the high of Thursday or the close of Wednesday, right? Or the open of Wednesday. It was hard to make that transition to be a person that really, really zoomed in that much on a daily, on a weekly, and a monthly chart, and literally spent the time aggregating and analyzing these few candles to make a decision about today's trading activity. And yet, that's what they do. If you want to see examples of that, Yeah, no, probably not today. Ran out of time. I heard Bitcoin is back below 48. I had already closed my trades. I have some that are trades, just long-term investments. I've closed my trades out, so I didn't know that it had got below 48. I just heard it on the Bloomberg. So when it comes to, you know, names connected to Bitcoin, it doesn't always have to be coins. It can be those chip names or other blockchain names. The EV market's looking pretty good this morning. Tesla is continuing that rally, right? It had that nice little sell off into the afternoon and bounced on the 50 for another shot at. But look at this. See how we're still inside of yesterday's candle. An inside day breakout play here, especially considering, we're only up 1.7. I want to get the ADR on Tesla. So let's come back over here. It's got an ADR of 4.8, right? So an average daily range right now of less than 5%. And Thinkorswim doesn't do a good job of showing price action on the daily chart before the market opens. But since we were just on TrendSpider, we know that Tesla is inside of this range right now. And what we want to see is, can it or will it be opening at or near yesterday's highest point? We want that pre-market gap up, just like it did, right? It closed here and it opened above the previous day's high the day before, right? So that's kind of be a little bit of what we're focused on. Because if we're looking for a trade opportunity, it's looking at that daily chart and getting some of that information ahead of time. Mark out yesterday's highest point. We'll be looking for an inside day breakout, meaning that we're opening inside of yesterday's trading range and then we're going to rally out of it. This thing may actually rally out before the open, right? We don't know for sure, but either way, once we get through yesterday's high, that'll be the support level. We don't want to see it come back through that level. Right now, it has before. The same thing happened yesterday, right? It opened decent and then fell down through it and then rallied back out. But we don't want to see those fades through that support level. In Tesla, the target is going to be back to the 1200, right? Now, obviously not today. Come on. So that's the target at the least, as long as we're getting the flows from the Santa rally, right? And recognize that move up is not yet even triggering any kind of investor concern. So it may seem very aggressive, but investors don't seem to think so, because the implied volatility is doing what it should do in a market rally. It's fading off. There are plenty of times where we see a market making moves to the upside and volatility goes up, right? Like it did here. And that's because it was moving really big moves and investors were getting concerned about it. And then of course it faded back off anyways. A little bit of a tell. All right, so it's not that far out of the money, but you can see how it's still very expensive, and the bid ask is really rough. $32.87, $33.20. You're slipping about $40 just to get into these things, right? And that's one. And if we're going to do a spread, we need two. Something like the 11.90, and we'll do the 25. It's an $8 debit, but it's a really wide trade, right? Let's just make it 25 points for some easier math. There's $550 of risk. Now, this has 24 days to expiration and you're risking 550. What's your expectations of profit? Well, if we slow grind, this thing is just going to lose. That's all it's going to do. It won't tolerate any kind of slow grind. But if we continue to advance aggressively, then this thing would actually start to pay out pretty good, right? So today's the 28th. Suppose we just move that to next year and say that it's January 3rd. And by the end of the day on January 3rd, we happen to move, we have 1200 as our marker. Let's just say that we make a move to, yeah, 1148. So between now and then, in 1 week, right? We're talking about by Monday. If the market moves to 1148, this trade would have already made half of the risk, right? 545. I wouldn't risk the full 545. I'd probably be risking around $200 to $300. More likely, knowing me, 2/3 of the risk, so around 300 and something dollars. You'd already have made most of that risk back. So there's your 1-to-1, and it still has the potential in case Tesla wants to make a blowout move that you could do that. One thing that I would mention is if you was to just instead of using the January of 22, use January of 23's. It's going to cost you more money. There's no argument there. But then if we make that move to 1148, you can run a bait and switch and get this thing rolled and take all of the risk out of it and then just be holding a long vertical call spread for a credit, right? How do you like that? You start with a debit, roll it as a debit, keep it a debit, and yet you're held it as a credit. It gives you a trade that means you cannot lose. You will get your bare minimum credit amount, or you will get more credit than the bare minimum credit amount, but you won't lose your trade. Have a lot of those bait and switch. We've been discussing them quite a bit in the bullish bears. The current one right now, I believe that is the most talked about is the Costco trade. We're in a $20 wide Costco trade. We ran a bait and switch, and right now it has 4 pennies of risk. And it's not going to expire until like July. And we are very comfortable with the idea of just letting it run. Even though Costco is sitting in nosebleed sections and everybody is thinking that it's got to crash now, we just stay in it because there's no reason to get out because we're not holding any risk. Yeah, bait and switch. All right, guys, have a good morning. Be careful, be safe. Keep your eye on the bonds and the dollar. I didn't get to those. That move in the dollar is getting a little bit exaggerated, right? We broke that low. We are now back down to Thursday's lows. So just keep your eye on the dollar and the bonds. We want a continuation of this, right? A continuation of nothing. Nice, soft, easy, no big moves, no big swings. When you're looking at the dollar, make sure you glance from time to time at that VIX to make sure that they're not beginning to correlate, that they're not moving in exactly the same way. Everybody, enjoy your day. If I have any opportunities to come in, I will stream this afternoon as we build some live trades. I don't know that I'm going to get that. That's just going to be the goal, right? To come in and do some afternoon swing trade builds. See you guys there.